is happening with gold? Gold just had its worst single day drop in 12 years, down nearly 6% on Tuesday and falling again today. What happened and what does this mean for you? What is the bull case and what is the bear case? And what am I doing with my gold positions? If you're interested in that, stay until the end. First, quick intro. My name is Molly. I used to be an investor to $4 billion fund, and everything I learned in that job, I'm here to share with you to help you invest smarter. So if that's interesting, hit follow. Gold hit a record high of about $4,382 an ounce on Monday, after months of relentless gains. Then on Tuesday, it all reversed. Prices fell nearly 6%, ETFs like GLD and GDX dropped sharply, and miners like Newmont were down almost 9%. By Wednesday, gold was still slipping. What happened? This is what markets call a classic pullback after a relentless run. Prices had already surged over 50% this year, the fastest climb since the 1970s. So traders began taking profits. At the same time, the US dollar strengthened and optimism around a possible US-China trade deal grew. Gold thrives on fear. When fear eases, gold usually takes a breather. What should you do? Let's take a look at the bull case and the bear case. Gold's rally this year has been driven by three things: massive central bank buying, diversification away from the US dollar, and demand for safe haven assets. Gold demand remains structurally strong. Central banks, including China and Poland, have been large net buyers for 2 years straight. Inflows into gold-backed ETFs are up nearly 25% year over year, and industrial demand from sectors like semiconductors and aerospace keeps rising. Now the bear case. Nothing rises forever, and gold is no exception. Even though gold has risen substantially in recent years, at some point its price will decline. Every major gold boom has been followed by a long period of underperformance. After the 1979 and 2011 peaks, it took gold decades to reclaim its highs. Since 1978, gold has averaged 6% a year compared to around 10% for the S&P 500. It's possible that this period of outperformance is followed by another stretch of weaker returns. Personally, I'm not selling. In fact, I'm planning to add another $1,000 to my position. I want to have 10 to 15% of my portfolio in gold and crypto. I have Ring, the gold miners ETF, Newmont, Alamos Gold, and Agnico Eagle in my portfolio. I'm a long-term buyer, and I don't believe conditions for global fear and uncertainty have evaporated yet. Profit taking alone isn't enough to reverse a structural rally. If today's decline is just that, healthy profit taking after a huge run, then the rise may not be over yet. But do not expect returns in the future to look like the past. If you're interested in buying, the lowest cost ETF that tracks the bullion price is STPR Gold Shares, or GLD. It charges just 0.1% in expense ratio and ranks number 1 on the Finvest scorecard under precious metals. Download the app and check it out.